welcome back to my channel. Today I wanted to answer a question that a lot of people ask me, so I figured I'd just do a video on it. So a lot of people come to me and say, what's the difference between an FHA loan, a conventional loan, and a VA loan? On an FHA loan, that's a government-funded loan, and those are required to have 3.5% down payment, which is a low down payment. And sometimes you can attach that to grant programs that your city or state might have. You can go all the way down to a 600 FICO score and get an FHA loan. So a lot of times if your credit's brand new or you had some blemishes on there, FHA is a way that you can get an approval for a house. They're a lot more forgiving on credit than some of the other loan programs are. Also, on the debt to income ratio, what we're going to do is we're going to calculate how much debt you have compared to how much your income is, and that debt's going to include your house payment in it. The debt to income ratio, you could usually go a little higher on FHA loans. So FHA loans have a little bit more flexibility, and the good thing about the FHA loans is that they have lower interest rates. So their interest rates don't really fluctuate depending on what your FICO scores are. If you have like a 640 FICO score or a 740 FICO score, you're going to pretty much get the same interest rate on an FHA loan. The downfall about FHA loans, just so I can go through the goods and the bads so that you kind of understand everything as you go into it, is the mortgage insurance. The mortgage insurance is a good rate. It's 0.85% if you're putting down 3.5% on your loan. But what's not good about it is that unlike a conventional loan, and I'll go through and explain that, FHA mortgage insurance will stay on for the life of the loan. So a lot of times when you hear about mortgage insurance is a good thing because it allows you to get into a house with putting down less than 20%. But with FHA, it'll stay on there forever. So what you want to do is that once you hit 20% equity in your house, you want to go ahead and just refinance off of your FHA loan. And then that way you can get rid of the mortgage insurance. On a conventional loan, going to the next loan, there's goods and bads on every single loan program that's out there. So conventional loan is going to require a minimum of a 620 FICO score, but here's what they do on conventional. So conventional is more credit score driven. So the higher your credit scores are, the better the interest rate is. So they basically start at like a 740. If you have a 740 or higher FICO score, your interest rate is the best rate that conventional is going to give. When you drop down 20 points, you go to 720, you're looking at a little different rate. You go to 700, you're looking at a little higher rate, and then on from there all the way down to a 620. So when your credit's under about a 720, sometimes FHA is a little bit more comparable to you if you're gonna look at like how your payment works out. I'm hoping that makes sense. Conventional, again, is a little bit more credit score driven. They do have options for you though. They have all the way up to 3% down programs. So a lot of times the common misconception with conventional loans is that, oh, I don't have 20%, I can't do a conventional loan. You don't have to. Conventional loans also have mortgage insurance. So you can take a loan that has, a 3% down payment or a 5% down payment or even 10%. And your mortgage insurance is based off of a couple factors, what your FICO score is, and it's also based off of what your debt ratio is and how much you're putting down. So mortgage insurance is a tricky factor on conventional loans because you have to look at a lot of different things to be able to calculate how much that is. But it does give you options. And one day I'll do a video too because on the mortgage insurance, because there's a lot of different ways you can work those mortgage insurance. There's sometimes you can take it in the rate, and there's some ways you can pay half of it up front and pay half of it in your monthly payment. So there's a lot of different ways you can manipulate that. So if you're wanting to work your payment, there's a lot of different ways to work your payment on the conventional side. However, the downfall about conventional is that if you don't have the really high credit scores, then you take it in the interest rate a little bit. So your interest rate is raised a bit because you don't have the high credit scores. So that's why sometimes you'll hear, well, FHA is better, conventional is better. It really just depends on what your credit scores are, and it really depends on what you're looking at in a property. Like if you're looking for a grant, FHA is better to add to that grant. If you have higher FICO scores, conventional is going to be better to add to that. That's why it's good to just, talk to your loan officer where you can kind of go over the different options of the two as it pertains to your specific situation. Okay, so the next loan that I want to talk about is the VA loans. And to be honest with you, and this is what I tell all of my veterans that I talk to, there is really no better loan out there than VA. VA is an amazing loan, and thankfully they give this to our veterans to help them out. A lot of times I'll have people that'll call me that are veterans and say, okay, well, I want to put 20% down, so I might as well do conventional. Not necessarily, because VA loans, the benefit when I put them next to each other is they give way better rates than conventional has. So their interest rates on the VA loans are really good. Definitely a good benefit for our veterans. Also on VA loans, it's not really credit score driven like I was just explaining with the conventional loans. It's more based off of just the fact that you're doing a VA loan. So if you have over like a 640, between like a 640 and 800, you're going to receive the same type of loan program, the same interest rate. There's not really a bump in rates depending on where your FICO scores are. The great thing about the VA loans is there's no money down. And I know that's a common thing out there, but you don't have to put any money down on VA. One thing that they did this year, just recently this year, is there's no cap on how much a veteran can go up to. So it used to be in the past where VA kind of had a county cap depending on what county you're in, and that's how high you can go. There's no cap anymore. You can go up as high as $1 million and not have to put down payments on the house, which is an amazing thing to do, because there's not any other loan program where you can go to those high limits and not be able to put a down payment down on the house. So it's really a good perk for the veterans. One other thing that sometimes isn't known is that if you're disabled through the military, so if you're VA disabled, you get the benefit of there's no VA funding fee on your loan. So that means that VA has a fee that they add onto the loan, and it basically gets put into your loan amount to raise your payment a few dollars. If you're disabled, you get to waive that fee, which thousands of dollars are saved by doing that. So that's an awesome benefit. The other great thing about VA is that there's no mortgage insurance. So there's really no other loan out there that you're going to be able to get that when you don't put a down payment down, you don't have to worry about mortgage insurance. So definitely good benefits about going in the military and having a VA loan. I mean, but obviously those loans are only available for the people that have served in the military and have served the time that they need to honorably. So anyway, that's the explanations that I have to you for the difference between conventional, FHA, and VA. I hope you enjoyed it. If you have any other questions for me, there's obviously a lot of different things, or if you want me to look at your file individually and see what would be better to you and compare them side by side, more than happy to do it. Feel free to comment below, or subscribe to my page, or just flat out give me a call, whatever works out best. I hope you have a great day.